Good morning, everybody. It's the 4th of May, and this morning I'd like to do the cloud chart ETF market review for the coming month, well, the current month. So for this morning's analysis, we'll be looking at the S&P 500 ETFs. There's the usual disclaimer. And in this analysis is the S&P 500 Spider ETFs and S&P 500 Sector ETFs. Apologies, the date there is slightly incorrect. So it's the 4th of May, not the 2nd. So jumping straight into the Pro Real-Time platform, we start off with S&P 500. We can see we've had quite a rally since November. Various consolidation periods here during December, and also now going through a fairly sizable consolidation year in February, March. We've tried to re-rally and break past these old highs here, did not manage that. So this high here as a critical resistance level. And we have support here at the bottom end of the cloud. We can see these levels here, as well as the top end of the cloud, these levels here, if we look at the front end of the cloud. So currently the market's consolidating within this big trading range. It's consolidating on top of the chart. The uptrend remain in place as long as the price action takes place on top of the cloud. And we recently had another MACD buy signal after this consolidation period. Okay. So far so good. Be aware that we are going into the sell in May, go away seasonal weakness between May and October, September, October. So we could see this market pulling back a little bit, trying to rebound on top of the cloud and then trying to retest the resistance here for the June, July rally. And then we could see a sizable drift down in the market. Okay. From a weekly cloud chart perspective, I would think we're a little bit extended. We need to see some form of consolidation here. Watch the 219 level as well as the 230 level as a key support zone. First the 230 and then from significant correction point of view, 219. I think we might see this 230 quite soon over the next couple of weeks. And then this 219 might be a correction we could see later on in the year from a seasonal weakness perspective. Okay. Right, jumping straight into the sector ETFs, materials, XLB. There we see somewhat of a consolidation now, moving sideways, rebounded from the bottom end of the cloud support here, rallied, tried to break past, managed to break past some of the resistance, but then corrected, and we're now looking at pulling back down to look for support here at the top end of the cloud. So watch the 5225 zone as a key cloud chart support zone. Okay. XLRE, the real estate sector, that's pulling back at the moment, looking at the cloud chart support zone. You have 3150 zone. Old highs is the next resistance zone. So we can see this MACD sell signal remain valid, and the support levels to watch out for is the 3114 and the top end of the cloud here at 3140, 3150. That's a absolute critical support zone. Front end of the cloud still indicates somewhat of an uptrend in place, so far so good, but we are consolidating with short-term weakness in this market. Okay. Consumer discretionary XLY, quite extended from cloud chart perspective. We've had a very strong rally. This is a consolidation period that it broke out of, found support at the top end of the cloud, and these cloud levels here are key levels to watch, as well as that 8822. So we could see some form of a consolidation. We've had a MACD buy signal, caught that rally nicely. It's a bit consolidating now, and looking at re-entry point in this market at the top end of the cloud if support comes in at that level. Consumer staples, XLP. Lost support at the top end of the cloud here. We can see is digging now. It's grinding into the fighting for support within the cloud. This low here, 5437 is a key level to watch. It could see as potential rebound there, and then back up to the bottom end of the cloud. If support fails at that level, we'll be looking at 5385 as the next key support zone from a cloud chart perspective. Then we look at the bottom end of the cloud for a support zone to come in. And so far, watching very closely to see if we see that rebound this week in that XLP index. Energy Select, still stuck in a downtrend since it lost support here at the bottom in the cloud. It you remain net short here. The key thing to watch out for is these lows here, are potential support zones. When's that one coming? There we go. So we could see potential rebound when it gets to these zones and back up to the bottom in the cloud, similar to this rally we've had here. So just trade this on the cyclicals, on this kind of like swing trade cycle. It gets to these support zones, it swings back to the bottom in the cloud. The cloud still gives us comfort that the downtrend remain in place because the front end of the cloud is still pointing downwards. Okay. Financials. Had a bit of a correction, sliced through the cloud support here. This 24 zone is now a key resistance zone. We rebounded from cloud levels here at the bottom in the cloud, old support lows here as well. And now it's going to grind higher to see what it's going to do at the $24 mark. Are we going to break out or consolidate at that level? So that's a critical area to watch out for. Okay, price actions taking place below the cloud. That is overall very negative. Healthcare XLV rebounded from cloud support within the cloud. We have these old cloud levels here. You can see these are key support zones. And so the support zone here is in around 74.50 with these old highs here as a major resistance zone. Can't quite get that icon in there. Right about there. So we're going to see there's an attempt to retest these old highs as a resistance. MACD remain valid from that cloud chart buy zone. Breaking out and looking at the target here of 76.80 as the next key profit-taking zone. Industrial XLI. Top end of the cloud is key support. Old highs key resistance. So it's going to be interesting to see if we're going to get to these old highs currently. There we go. There you go. So making a double top formation there with the potential weakness to the downside here at the top end of the cloud. So that's the downside risk. So steady as she goes, trading up to the old highs here to test resistance. Technology broke out nicely out of a consolidation period here, but nice rebound from cloud support and old lows. And now the top end of the cloud is a key support zone to watch out for. So we could see this come back to form another base, then continue its rally. Front end of the cloud still positive, indicating strong momentum to the upside, but we see short-term consolidation risk as a pullback is possible back to test the support at the top end of the cloud here. Okay. Utilities, sideways consolidation. It's now looking for support at the top end of the cloud here. Watch these levels, it's critical. These lows here to see if support's going to come in and then a potential rebound. MACD sales signal kept you on the side of this trade for quite some time. We now need to see a key catalyst from either a breakout or a breakdown past these key levels. Right. So overall, watching the S&P very closely to see if it's going to retest these old highs or consolidate back down to the top end of the cloud for support. MACD remain valid until we get to these resistance zones, and then we should be looking at the possible profit-taking or short-selling signal. Okay. Until next time, happy trading.